Hello, everyone, and welcome to another edition of the Forex Technical Market Update for September 9th, Wednesday, September 9th, 2015. Okay, what we have in front of us is a chart of the USD versus the Japanese yen. And we're going to do some analysis, and then I'm going to speak about a quirk and a attribute that a lot of investors and a lot of traders have that are essentially holding them back from making profits in the markets. But let's see what the markets have in store. The Japanese yen is down versus the US dollar on the morning, and this market, as I said, is mirroring the stock market where when the stock market recovers, the USD Japanese yen is up. When it's going down, the USD Japanese yen is going down. But the key resistance at this point is at this 121.75. This 121.75 level, if the market is able to close above this level, that would be fairly good for the bulls, and we could see a recovery in this pair. And even it's early days yet, but even a return up to the 124 or even the 125 level in this pair. If we see the market close below 116, that would be very bearish. And if we get further selling in the stock market, that would be fairly bearish for this market, and it could essentially end this long-term uptrend that we have been in with this pair. Okay, taking a look at the euro. Euro is down this morning slightly. We're at 111.53. The market is still in this range, this 6 month range that we have been seeing, and very anemic price action here in the euro versus the USD. That's not. There are times when the euro goes to sleep, and this is definitely one of these times. Now, normally when you have the euro going to sleep, the action is normally in the crosses, and for example, British pound franc, British pound Australian dollar, British pound yen, New Zealand yen, etc., etc. So that's why if you're a swing and position trading, it's good to look at other currency pairs, because if you're a position trader and you're trying to get some trends out of a market that is just moving sideways, you will pull your hair out. Okay, so support in the euro is at 110, where this trend line crosses, and resistance is up in this 116. This spike high up at 117.14. Okay, taking a look at the British pound versus the US dollar. The market is unchanged on the morning. We're down slightly, but the market has recovered, and you see that the market did bounce off of support right here in this 151.80 area, and has bounced. Now, this is what you could see a slight head and shoulders pattern in this market, with the market breaking the neckline here. So we could see a rally back up to here, and then the market could collapse. Or this could also be interpreted as a channel, although the market did briefly break above. It could be interpreted as a channel, and the market could return up to the 158 level. So this market right now is just really in no man's land, with a slight bias to the downside with the British pound versus the US dollar. Now, I spoke about a market that the crosses, British pound versus the Swiss franc. We see, just taking a look at the monthly chart of this, we see that what could be interpreted as, you remember when we had that big spike down in the Swiss franc earlier this year, it's a monthly chart, and this could be interpreted as a double bottom. So this could be bottom number one, and it didn't really go exactly to the pip down back to this level, but this could be bottom number two. And what we would need to see, this is long term, remember, is that the market needs to close above this resistance level, this blue line here that I'm drawing, and a red line on the chart. A break above this level, and the actual level is up at 154.98. A break above that level would be very bullish, and we could see this market accelerate pretty strongly to the upside. So that is definitely something we're looking for a longer term position play, British pound versus Swiss franc. Our members are with our Forex income system are already in this trade, and we're looking for a breakout. Okay, taking a look at the Canadian dollar, we see that the Canadian dollar is recovering, and as I have been saying, this market is ripe for a pullback because it has been rallying ever since May, and we could see a pullback in this market down if we break this 130 area of support. If the market breaks below 130, that would be fairly bearish for this market, and that could initiate the pullback. Australian dollar is up slightly on the morning. This is a market that's also due for a pretty strong or due for a pullback, because we have been declining for a number of months now. Now, when I say due for a pullback, I don't mean you should go out and buy this market, because the market is still in a strong downtrend. And I don't know about your system, but with my trading system, we do not buy markets that are, if the market's in a downtrend, I am looking to sell the market and not buy the market. If there are no good sell signals at this point, we will just stay out of the market, and we don't try and trade retracements, because trading retracements is possibly one of the hardest things out there in the world of trading. And as I said, trading retracements, another thing that I find that a lot of traders, by coaching traders, by trading even on behalf of traders, I see the element of fear come in. It's very often that during times when markets are down, or during the down times, investors get very scared and cannot execute their trading plan at that point in time, or cannot execute their investment goals. They get scared and pull their trades out of the markets, and that is essentially the time you should be even more bold. When everyone else is running for the hills, that's possibly the time to get involved with the markets. So fear is something that all humans have. We are human beings, we are emotional beings, and we do have a lot of fear. But what I can tell you is that fear has no place when it comes to investing. And if you are a fearful investor and you are a fearful trader, you'll eventually sabotage yourself and exit positions too quickly. That would turn out to be winning positions, because you have to understand how markets move. Markets, as you can see, this Australian dollar. Look on this. Even this was a strong downtrend. Look on this downtrend. The market did not just head down from 105 down to the $70 level. It went down. It consolidated for a month or two. It went up. It went down again. It went up. Consolidated for a number of months. Then went down. Consolidated. Went down. Went up. Went down. Went up. Went down. So you have to understand that markets do not just move in one direction or just down immediately. These markets will move down and move back up. And what you'll find with the fearful investors is when the market is moving against them a little bit, they are ignoring the major trend and they get fearful and exit their positions too quickly in the markets. And just remember that fear, it's something that's difficult to overcome when you're trading. But you have to stick with your investing and your trading plan. Okay, and for now, as I've been saying over the last couple of weeks, is the time to get involved with the forex income system, because the latter part of the year is normally the most active part in the year. And what we see is that there's a lot of negative information out there about the stock market, etc., etc. Now is the time to get involved, because the stock market went in, and what we had was a dip down in the market, and folks who bought this dip are doing fairly well at this point in time, because the market is up. So that's why when you had the highest fear was when exactly the time to get involved with the markets. So if you'd like to take advantage of the signals, click on the link below this video to get started. Okay, thank you very much for listening, and we are definitely in for some exciting times with the market. So I'm seeing some major moves coming up, and I hope you are able to benefit and take advantage of the moves. Thank you very much for listening, and I hope you have a wonderful day.